Thursday, August 8th, market analysis. Stan Ehrlich, good morning. 9:54 California time, about when I should be starting usually, but sometimes it's a little later. We have some possible short-term bottoms in the indexes. I always start out with the indexes. I go to futures and sometimes some other topics. So pay attention carefully. We got oversold a few days ago. The market, in a general sense, most of the indexes, some of them came down to a support area. Some accurately, some pretty close. And in a few cases, we've now gotten in the oversold condition, or within the last few days, below yesterday's lows. Now, that would be the overnight markets, typically. Russell, NASDAQ, E-mini, and YM, Dow futures contracts. So in the E-mini, we have a low lower than yesterday's low at a support area in oversold conditions. This is the fourth day of this week. Monday was the lowest low, and we have gone up and down rather radically, but the net change hasn't been that much unless we stay where we are. The closing prices on the other 3 days, Monday, Tuesday, Wednesday, are significantly lower than our current quote. So Spider is up 9.5, so we should be up about 95 or 96.5 higher on the E-mini, about the same, with the decimal point just being moved. So if we get higher than yesterday's high, this will turn green and it will be an official ER buy signal. Now, if that happens, I'm skeptical about the signal actually turning out to be good. I shouldn't be. I'm starting to inject my own opinion, etc. This is a trading strategy. We'll find out if they work or they don't work, regardless of what I'm saying. But as you know, I'm looking for a move down into October for the October lows to occur again and again and again. Since 1997, it's only failed 3 times. It's over 90% likely, if you want to use those kind of statistics, to do it again. Or it's overdue for another mistake. It depends upon your approach. But the fact is, it happens a lot. So why not expect it again? I do. I think we're going to go down rather significantly. There are going to be rallies in the interim, in the meantime, but my minimum downside objective is in the ballpark of 49.60 down to about 48.70. Unfortunately, even though that is a very good support area, it's not too damn far away. So I got 2 months to fiddle around and go down 300-400 points. That doesn't seem to fit quite right. Unless in the meantime, there was a slow, decent 2 or 3, 4 week maybe rally, and that is going to be up to about 54.33, maybe 5,400, mildly higher. I don't expect too much more. So what do we got? Oversold, possible buy signal, not yet. Modest rally, move down over several weeks into October down to that 4,900 zone. Period. Next chart. Looks like in the E-mini on a 1-minute chart, we are having some trouble around here. No surprise. We're at the highs approximately of this week. I'll go back to the daily real quick. Monday, Tuesday's high were almost exactly the same. Yesterday, Wednesday was just a little bit higher and didn't stay there. And today's high is a little lower than all 3 of those. So a little resistance is stopping the rally so far. You can see in the last couple of hours, it's been stalling out. Spider, same thing for all practical purposes, but the chart is a bit different because of the fact that it's only trading from 6:30 California to 1 o'clock. Now, the minimum downside objective on this head and shoulder, there's the shoulder, June 20th, the first shoulder, the head of the formation is around till middle of July, and the last shoulder was just recently the 1st of August with a bearish engulfing. When that happened, I saw the shoulder form. I started talking about neckline, got broken the next day in a classic downside breakout right out of a textbook. Huge move down the next day, which was Monday of this week. And all of a sudden, it reached the minimum downside objective very, very accurately. Before Monday, I had drawn this downside objective at 510, give or take a few ticks. So that's done. Now we're bouncing back to the neckline, which is close to resistance. So can we get a little more strength out of this rally? I don't know. Remember, we're fiddling around the last couple of hours at a resistance level. Next chart. Spider, 1 minute. You just more detailed on the daily. Looks like it's stalling out. Got to have a little bit more down move to break out of this minor multi-hour sideways stuff. Then if it keeps going down, we're probably going to have new lows for the whole week soon. But there is that chance, but it doesn't change the big picture, that we'll have a rally back up to resistance 540. Then it should turn down. I can't change my mind about October. Not at all at this point. No reason to. Qs. QQQ. In a support and resistance zone right now. It did break below it on Monday, but the close was back up inside it, and here we are stuck in it so far. All of the price range Tuesday, Wednesday, and today is at the top and bottom of the support and resistance area. I need a breakout below today's low, yesterday's low, Tuesday's low in order to challenge Monday's low in order to make new lows. Now, again, my downside objective could be as low as 400 area on the QQQ, but it seems to be a judgment call a little too close. I'm not sure exactly how I'm going to end up handling this, but my downside objectives looks reasonable for a rather variety of ideas, but price-wise, it's relatively close. So, 2 months to go. We'll see what happens, how much of a rally we're going to get in the meantime, whether it stops or not at gap closure prices or resistance, and whether we get that new low for the trend down all in the next approximate 8 weeks, 7 weeks, 6.5, 9, something like that. Next, QQQ. Same commentary, really don't have any change, just the details. Next, NASDAQ. Now remember, the NASDAQ in general, in particular the NQ, has been leading the way up and down, in my opinion, for the last year or two. Might even be longer, but that's how long I've noticed. Goes up faster, quicker, breaks out sooner, cleaner, holds rallies better, goes down quicker, faster, better, stays lower, et cetera, during up and down trends, short-term or long-term trends. And by the way, the word trend is so ambiguous. When I was on CNBC 3 times. So when people on TV, and I've been on other cities, smaller stations, local city, many times, says the trend is up. What do they really mean? The trend for what? The last week, month, 6 months, year? They never define the time frame, which is gets me upset. I'm talking about a very short-term trend. It has lasted about a month from the top of the market, and I don't like to use the word trend because 1 month doesn't really, for me, define a trend. It's a downside correction and a longer term, obviously 2 years long uptrend, period. So this is a correction into October during a longer term bull market. Next chart, NASDAQ, 1 minute, 5 minute actually, having trouble right around the same levels it's had for the last couple of days. I know it could turn down and I wouldn't be surprised. Let's look at the YM. We did make a lower low, lower than Wednesday and Tuesday. We were oversold. I'm looking for a rally, but I don't want today to be a bullish engulfing. That would be a little bit too much strength, too fast, too quick, too big a buy signal for me to be expecting, but it could happen. So if it doesn't happen while I'm talking, then we'll see tomorrow. Or you can take a look, on the close. Nevertheless, this has been a very large sideways trading range ever since essentially, oh gosh, the beginning of December last year. 9 months? Yeah. That sell signal didn't work all that well, just a little bit. That sell signal was okay. That one didn't really work, period. But that sell signal's the top of the market April 1st. That buy signal's the bottom of the market April 19th. That sell signal happened real time, of course, automated trading system, ER signals, on May 20th at the top of the market. And the next top was, again, we have a triple threat here. We have 3 sell signals on all 3 highs of major consequence for this year in the DIA YM contract, the YM futures contract. Our lows are close to the low on Monday. Our highs are basically lower than each other. The Dow indexes not holding that well, not looking that strong that fast. And I think it's going to stay that way for a while. Now, it's a big sideways trading range. If we break below 37,857 approximately 865 3, we should drop off a lot more, and I don't have any support ranges zones marked yet below that. That would be a new low for the whole year. Right now, I'm only expecting it to come down to 38,200-ish, which is awful close. That's my problem. I've got too much time and not enough elbow room. Next, Dow YM short-term chart. We're looking at, in this case, a 30-minute chart going all the way back to April of this year, showing you the detail, some great trades involved. Last one was super from the high of the move all the way down to the low of the break. Now, daily data, major rally up into major resistance, stopped it again, came, and that's the highs for the last 2.5 years, that zone up there. This is daily data. We made new highs since January of 22, all of 22, all of 23, and a half of this year. So we came back down into a wide, sloppy area of support. Not much you can say about this huge range, except I don't see very many charts that go sideways in such a huge range for so long. Now, this has a lot of elbow room, and I can't help it. October, we could be down to 1770 or around the lows that we've seen in June, July of 22, again, October 22, March, May 23, lower, but not that much. October of 23, and I think we could get down there again in 2 months. Short-term data on the Russell, 1 minute, no big deal. Excuse me, no big deal, just kind of topping out. Okay, bonds. Bonds have hit a resistance area, got overbought, turned my custom code yellow, came down Monday high, Tuesday, Wednesday, today, Thursday, new low, every day, new low this week. Coming back close to now support. I think, let's rescale this, we're going to see a test easily now of 120.5. But that's only going to provide a little bit of a bounce, I think. In fact, this is getting complicated because bonds could be forming from October 22, October 23 to 2 months from now, October 24, somewhere around here in time, and frankly, around here in price during the month of October, right around, 1 second. I'm going to put a circle in here, F11. This is the first time I've done it for quite a big time period. So October 1st is this date right there. And I got to pick approximately the top of the range I think we're going to get to. Okay, good enough. Oh, I didn't want that kind of circle. Sorry. What is it? Control F11? Yeah, probably. And go back. That's what I wanted. That's November 1st. Bottom could be down there. Okay, and I'm actually going to drop the top a little. Okay, I think that we could have a low in the bond futures, and it will definitely not be the September, well, yeah, contract. It'll be probably December bonds in this price range on the continuation contract. Yep, that's it. I'll leave that circle there for the next couple of months, unless I need to, and I'll tell you why, change it. And also, I got to point out that is simply the area of the neckline of this large head and shoulder bottom that we have so far. Now, that one has a shoulder March 3rd of 23. They had October 23 of 23. And I'm using this one right here as the pivot from the timing standpoint. But the lowest low was April of this year. But I'm calling the three little lows the formation of the shoulder in general because when it broke the neckline convincingly, it just skyrocketed. And that's only the last couple of weeks. That's classic. Coming down and taking a long time to get back to the neckline is not particularly classic, but I've seen it. It's not breaking any rules. So bound up, down, up, something like that, all the way to here in October. Next chart, 10-year notes, everything I just said is the same. It's just different numbers. Timing, etc. Same. Crude, starting to see a rally here. Came down to some support, tested a trend line, got a big, huge pennant formation starting to develop, a year ago. A little more than a year ago. Trend line survived nicely. Bull trend line. Bear trend line survived nicely. You're stuck between a rock and a hard spot. I'm going to have to wait a little bit on crude oil to get signals or some convincing situation. But the pennant is good. And we're just kind of stuck for a little while between until the trend starts again. Natural gas broke below downside objective, finally got there, worked its way a little bit lower, got oversold, a little rally at the moment, very possible coming back up to 2.3, maybe a squeak higher than that, 2.4.5. Then I think it's going to go flat to down after that. It's bearish, longer term, friendly for a few days or a week or something. Heating oil, pretty much the exact same comments, except major support area it bounced off of very nicely, got only oversold yellow for only one day and bouncing okay. Otherwise, resistance is going to stop the rally, I think. Turn down, support is going to start to get broken. It's going to chew its way into this giant support area and maybe eventually get down to 1.7. Next, we do have in gold a very sizable sideways trading range, 4 highs, 3 of them on exactly the same trend line. Really, basically 3 lows, all 3 of them on the same trend line, support line flat, creating what I think you might call a double, and a quadruple is just not an existing formation. It's just simply a resistance area that stopped it 4 times. I don't know of a pattern called a quadruple top. Triples are rare as hell. Doubles are fairly common. So, big trading range. Break support, I think it's going to do it. Getting below 2350 will cause me to scream bloody murder. We're going down to 2180. Next. Silver and platinum have the same exact bearish formation. Head and shoulder top, first shoulder, April 12th, top of the formation, give or take a week, May 23, last shoulder high to the day, July 11, which the last shoulder was by itself a small 2-week head and shoulder top, It worked great in a 2-day period. Caused the breakout of the bigger pattern. It's already seen a move down 2/3 this minimum downside objective. And looky here, today, right now, trying to develop, is developing. If it stays above the close of yesterday, which looks highly likely, we're up 0.66. Pretty nice move. Bullish engulfing, covering not one, excuse me, or two, but 3 previous lows, and that is the lowest low for the move down into support. So I'm supposed to tell you, which I have to, sorry that I got a little cough, that this market is, if it closes lower, all bets are off. It will not be green. It will not have a bullish engulfing. It needs to stay on a closing basis above yesterday's close. 1 tick or more. We're way more than that, way up above yesterday's high at the moment, and right around the high of Tuesday, which was the last 2 days. This looks real good. I'm going to get a rally maybe back up to this previous rally high, 29.34.5, 345. And I can't rule out even higher back to the neckline. As long as this doesn't go too far too fast, I don't trust it for a big move up. I don't think this is a major bottom. I think it's a buy signal on a minor bottom that's going to stall out somewhere around 29 to 30. And then we're going to go down to the minimum downside objective on the pattern to 24.08. Let's call it 24.10, whatever. And maybe even lower. Next. And that could take a month or two. Platinum is exactly the same. Everything I said is so similar, it's ridiculous. I cannot remember when I ever saw a head and shoulder top where the last shoulder was a head and shoulder top by itself, and it's got a duplicate, a twin. These are not close cousins. These are twins. No new low today, no bullish engulfing. Simply a little rally, higher than Tuesday and Wednesday, up against a little tiny bit of resistance, not much. Could rally a little bit more. Wouldn't be surprised if it got close to 8 or 987. But I don't want it to go much above that because there's your neckline. And I'll pull it up a little bit further here. Yeah, a little bit more. That's the neckline. Remember, I've got to cross these lows right there and pivot on that low. Doggone. All right, so maybe a little bit more rally. It's going to fail, in my opinion. It's going to make new lows, in my opinion. And the downside objective, maybe a month or two from now, is going to be 807. Next chart. High grade. Almost a new low, but oversold. It is a little bit below support, so now that's a little resistance, and today's high stops right there. So is it going to turn back up? It is oversold, but I don't see a reversal. It's coming into a fairly large support area going back quite a bit of time. We're at the beginning of some sort of a minor low, but it hasn't had a lowest low yet. So somewhere between here and probably 33.72, and we're at 3.96. I think it's going to bottom out and turn around and rally, but not yet. If you're short, I would consider lowering your buy stop, but I wouldn't necessarily get out. Next. Beans, oil, meal, corn, wheat, cattle, hogs. Beans have another new low. I don't know how low is low, but this just keeps coming down. I see no bottom, no reason to stop expecting lower lows, and a trend to continue lower. Soybean oil is almost totally similar. Very, very similar. Major new lows since June of last year, more than a year, staying there. Now a little bit of a rally right up to resistance for the last only 2 days. Should stop, should turn down and make new lows next week, probably. I could allow for a little bit more strength, maybe 43.5, maybe 44. But this is good enough. I see no reason for it to rally a lot more. Bearish, but at the moment, maybe a little lower, a little higher, skeptical as hell. Next, meal. Bearish engulfing, almost a ER sell signal. Just a second. Yeah, that should have turned red. I got a code problem here. No, that's not. Sorry. I know why I said that. August soybean meal did have a bearish engulfing on that day, Tuesday of this week. But the September contract, with a lot more time to trade and a lot more activity, did not quite have a bearish engulfing. It did not have an outside down day. All it got into was overbought. So no red, no signal. And overbought stopped it, resistance stopped it, and down Tuesday and today, Wednesday, I meant, and down today, Thursday. I think it's going to break these lows. I think it's going to finally reach my downside objective in a matter of days. And I think it's going to break this longer term support area and get below 286. And once it gets, if it gets below 286, sayonara, hasta luego, bye bye. It's going to go down, down, down like the other grains. Next, we've got corn. It did give us a buy signal on Monday. It hasn't performed yet. Yesterday, we did get a new long position on ER3. It is also losing a little money. Our ER1 overnight got stopped out at the low almost exactly yesterday, so we're out of it. And the decline today does not hurt our previous losing trade. It wasn't much of a loss. 382 approximately down from 88.6 cents. 300. That's like a grocery bill these days. And did make a lower low today, but our ER3 long position overnight is losing a little. Currently trading 80.75, short at 85, losing a nickel, 6 cents, 5 cents. But our stop is 78, so we only have a couple of pennies more risk before we get bumped out of this. We'll see. I hope it turns around and goes right back up. Some people with aggressive trading techniques might consider adding to this if it does start to make new highs day by day. I can't say that's a bad idea. My strategy doesn't do it. Next, wheat. We got a brand new buy signal. It's not the low of the move, which we have a buy signal on July 31st, which is still the bottom of the market. On the day after the bottom of the market buy signal, August 1st, we had a low enough to catch ER3. So ER3 bought it right there, exactly. 525 and a fraction. ER1 bought it right here, ER1 overnight, 531. Right now we're trading 39. So we've got an 8-cent profit on one of them and a 25 to almost 40, 14-cent profit on the other one at the moment. Good. Both are surviving. Nothing got stopped out. We got our trailing stop on one overnight that has gone flat. Our trailing stop on ER3 overnight has risen so that it actually got hit yesterday. I'm sorry, we got stopped out with a small profit yesterday on the ER1 overnight. Yep, the only one we got left, I'm sorry, is ER3 overnight, which is 14 cents. It was a small profit on the other one already, and we're out. Now, cattle. Break today, down 55 ticks. Oversold for a few days now. Trying to hold a bull trend line. that now has basically three, this is the third time, touches. But the downside objective on this small head and shoulder, double top, of which we didn't get any sell signals, unfortunately, just overbought. Then we've got a downside objective because it broke out way back here at 181 on a closing basis. That was Monday of this week. And we're progressing downwards. Monday was the lowest low so far. Current quote will make, if it stays here, a new low close on the way down by a goodly amount. Not quite a new low yet, but will probably happen next. Minimum downside objective 172 for the double top. And look at Miss Piggy. Head and shoulder bottom, maybe as of yesterday. But guess what? It is ruined today. Today, we dropped way too low. This shoulder has now been violated badly. Delete, delete, delete. No neckline anymore, although that could be a bullish breakout from a resistance standpoint. I already have lines that are up in that area. Delete. And I'm deleting the objective because the pattern's going bye-bye. Now, resistance still applies, so I'm going to leave this dotted line up there. That looks too low, and the timing is starting to get ruined. Also, I have to watch this very carefully. There is a chance. No, that was the timing already. I timed it from here to the head. Yep, I remember this. And from the head perfectly to, yep, Monday. Nope. Timing is off now. Prices are too low. This is ruining the shoulder. Oh, I've got to add. Today it gapped down. Today it gapped down. So therefore, downside exhaustion gap, maybe. Current tick relatively close to the high. Boy, okay. I may have to draw my head and shoulder a little differently to include today's low if it goes straight up from here. We'll see. I probably should make amends to the pattern. And we're back to the E-mini. Let's take a look at the 1 minute to see if we've done any damage or good. New highs for the day. Nice little bounce. We're getting much closer to these bullish engulfings, which I do not want. Not yet on the E-mini. Spider never got lower. Can't do it. NASDAQ QQQ did get lower, and it could make it. Today's NASDAQ low is, just a moment, 434.16 with the low yesterday, 434.37. It could do it. If it gets higher than yesterday's high, we could have a bullish engulfing on the E-mini, and we could have a bullish engulfing on the daily QQQ, which means, of course, the 1 minute, obviously. Got easily lower. Wait a minute. Hang on. No, the 1 minute didn't get lower than yesterday's low. Then why am I getting the daily data getting lower than yesterday's low? Not sure. That's not right. So the daily will have a signal, but the 1 minute won't. So I got to figure that out. NASDAQ, very possible. Well under yesterday's low. Oversold currently as well as within the last few days. And it's close to high and last and close to having a bullish engulfing. 1 minute did get lower than yesterday's low. Will have a bullish engulfing buy signal and a new long position. If it gets above my little resistance line, I'll raise just a hair. That one right there. So, could happen very quickly here also. Could have a bullish engulfing also in YM. Yep. And how about the Russell? I don't think, okay, we got below yesterday's low. We're not above yesterday's high. We were oversold the last few days. The Russell could also have, if it gets above yesterday's high, a bullish engulfing ER buy signal. Very interesting. That's it for today. Thank you very much. See you tomorrow. Profitable trading to you.